So hello my dear friends, welcome to another video on income tax. Today we will discuss taxation of virtual digital assets. It's actually super interesting concept as well as important for your upcoming CA-CMA final examination. So without wasting time, let's get started. So let's understand what exactly is the meaning of virtual digital assets, which is mentioned under section 2 subsection 47A of Income Tax Act 1961. Now, in this session, we will cover all the relevant theory as well as the question which forms part of your May 2023 revision test paper. So stay tuned. First of all, let me complete the theory. Thereafter, we will solve the problem as well. Now, we will start with the meaning of virtual digital assets. So virtual digital assets means any information or record or a number or a token not being Indian currency or a foreign currency. So Indian currency and foreign currency, you don't have to treat it as a virtual digital assets. Now, it can be another information, code, number, token, etc., which is generated through a cryptographic means or otherwise by whatever name called, or providing a digital representation of value exchange with or without consideration, and it functions with promise or representation of having an inherent value, functions as a store of value or a unit of account, including its use in a financial transaction or an investment, but not limited to investment scheme, and can be transferred, stored or traded electronically. So simply means a cryptocurrency will come under this particular thing. A cryptographic means digital representation having an inherent value. It has a store of value or a unit of account which is transferred, stored or traded electronically. Say for example, like coin, Ethereum, then Bitcoin, Ripple coin, Dash coin, etc. The example for the first one, that is an information or a code or a number or a token which forms part of virtual digital assets. So these are the virtual digital assets. Along with this, number 2, a non-fungible token or any other token of similar nature, that is NFT, by whatever name called. So friends, what do you mean by NFT? NFT means a unique digital identifier that can be copied, substituted or subdivided, that is recorded in a blockchain and that is used to certify ownership or authenticity. That means it's a digital art where you can enjoy the exclusive ownership. So the pictures like this can be the example of NFT, non-fungible token. So that is also comes under the definition of what? Virtual digital assets. Now, or any other digital asset that may be notified by central government. So we can say the cryptocurrencies as well as NFTs will come under the definition of what? Virtual digital assets. Now, they also say accordingly, the central government has wide notification number 72/2022, which is dated on 30th June 2022, notified that the following virtual digital assets would be excluded from the definition of VDA. So the following items shall not be regarded as a virtual digital assets. It has been notified by the central government by way of a notification. So let's understand. Number 1, a gift card or a voucher being a record that may be used to obtain goods or services or discount on goods or services. Say for example, you have a discount card which is used for you, which is used by you in a shop or in a store or in an online store to get a discount. That is not regarded as a VDA. Number 2, mileage points, reward points, loyalty card being a record given without direct monetary consideration under a reward or award, benefit, loyalty, incentive, rebate or promotional program that may be used or redeemed only to obtain goods or services or discount on goods or services. Say for example, loyalty points, mileage points, etc. that can be redeemed while fueling. Mileage point you can redeem while fueling. So those things, even though it is a digital representation, not regarded as a virtual digital assets for the purpose of income tax. Now, moving on. Subscription to websites or platforms or applications. Say you have a subscription to website, platforms or application, it is never regarded as a virtual digital assets. So 3 of these items are never regarded as virtual digital assets. Which all are they? Gift cards, vouchers, etc. Mileage point, royalty point, reward point, etc. Or subscription to website, platforms or application, etc. is not regarded as virtual digital assets, even though it is an electronic digital representation. All right. Now, so this is the definition for what? Virtual digital assets. Rather, we can call it as VDA. Now we understood what exactly is VDA. Now the question is, what exactly is the taxation of this VDA? So friends, please listen. They say rate of tax, where total income of an assessee includes any income from transfer of a virtual digital asset. Such income would be taxed at 30% under 115 BBH. So friends, according to section 115 BBH, the rate of tax for a virtual digital asset shall be 30%. So if your total income consists of income from virtual digital assets, you are supposed to pay a tax at 30%. Now, while computing income, no deduction allowed. So in computing the income from transfer of virtual digital assets, no deduction would be allowed under any provisions of this act in respect of any expenditure or allowance except cost of acquisition. That simply means while computing income, you can claim cost of acquisition as a deduction. No doubt. Apart from cost of acquisition, you cannot claim any other expenditure, no relief, no allowance in whatever name it is. So apart from these particular cost of acquisition, you cannot claim any other expenditure as a deduction. That means the purchase cost you can deduct. Apart from that, nothing is deductible. Now, if any, the further no set off of any losses allowed to the assessee from such income. Say for example, you have some income on transfer of virtual digital assets. Say it is 10 lakh. And you have some other loss. We can call other losses. Say a normal business loss or any other loss. Now the question, can you set off the loss with income taxable under 115 BBH? The answer is no. From the income which is taxable under 115 BBH, so that means income on transfer of virtual digital assets, assessee is not supposed to claim any set off of any other loss. Alright, moving on. Next is set off or carry forward of loss from transfer of virtual digital asset is also not allowed. That simply means, friends, so loss from transfer of virtual digital assets would not be allowed to set off against income computed under any provisions of this act to the assessee, and loss would not be allowed to carry forward to the succeeding assessment year. So these 2 points you have to be very careful. So listen. Two things you have to be very careful. I'll give you 2 examples. Say example number 1. Say I've transferred my cryptocurrency, that means virtual digital assets, for 10 lakhs. My cost of acquisition was say 12 lakhs. My cost of purchase of that particular asset is say 12 lakhs. I can claim this cost as a deduction, no doubt. Now, apart from this, I'm not supposed to claim any other cost as a deduction. Now, I will incur a loss. What if I have incurred a loss? Can I claim this loss as a deduction, or can I set off this loss from any other taxable income? The answer is no. Now, can I carry forward this loss to the subsequent year? The answer is no. So if I'm incurring a loss, you simply ignore the loss. That's it. That is point number 1. And example number 2, say I've transferred virtual digital assets, say for 15 lakhs. My cost of acquisition is say 12 lakhs. So I'm incurring a gain of 3 lakhs. Now the question is, I have some other loss which is say 2 lakhs. Say normal business loss or any other loss, say income from or loss from house property, etc. Can I claim this loss as a deduction from this particular income? Again, the answer is no. You cannot claim any loss from that income, as well as if from that transfer, if you are incurring a loss, you must ignore that loss as well. I hope you got my point. Now, moving on. So, virtual digital assets need not be a capital asset. So, the definition of transfer under 247 would apply to any virtual digital assets, whether it is a capital asset or not. So, this is a dangerous statement. What do you mean by that? Say, for example, for me, virtual digital assets is my stock. So, I'm frequently transacting in virtual digital assets. I'm keep on buying virtual currencies or cryptocurrencies. Thereafter, I'm keep on selling this cryptocurrencies. Then I'll say that this is my stock in trade. Now, can I treat it as my stock in trade, and can I claim this as an income taxable under section 28? And can I claim all the deductions from 30 to 37? The answer is no. The answer is no. Even though it is your stock in trade, you need to compute transfer or taxation on transfer of virtual digital assets under 115 BBH. So that simply means whether it is your capital asset or not, taxation will be under 115 BBH. If it is your capital asset, then again under 115 BBH, that means 30% rate will come. You cannot claim any other expense as reduction except its original cost of acquisition. I hope these points are clear. Now, moving on to the next area, that is taxability of receipt of virtual digital asset as a gift for inadequate consideration. Say for example, I'm getting a virtual digital asset as a gift. All right. Now, what is the impact when I'm getting a virtual digital asset as a gift? So listen, if virtual digital asset is received by a person from any other person without consideration, and the aggregate fair market value of such virtual digital asset as on date of receipt would be taxable as an income of the recipient if it exceeds 50,000 rupees. So friends, what do you mean by this? Say for example, Mr. JK has received a gift. Say today is my 30th birthday. All right. So on my 30th birthday, my friend has given me a gift. That is, my friend has given me a virtual digital asset as a gift. Say for example, he have given me Bitcoin worth 2 lakh. He have given me Bitcoins worth 2 lakh. All right. So I'm getting this virtual digital assets for free. So I'm the recipient and I'm getting an advantage by way of a gift. So what to do with this? This entire 2 lakh shall be taxable under section 56, subsection 2, clause 10 under IFOS. Hope you remember taxation of gifts under IFOS. So if I'm getting a virtual digital asset as a gift, then it is fully taxable provided the aggregate fair market value exceeds 50,000. Now, point number 2, for inadequate consideration. Say for example, if the difference between the aggregate fair market value and such consideration exceeds 50,000, then such difference would be taxable as an income of recipient. So what do you mean by that? Listen friends, say for example, I am getting a virtual digital asset of worth 2 lakh, having a fair market value of rupees 2 lakh. All right. And I'm paying a rupees 20,000 to the person who has given the virtual digital assets. So I'm buying virtual digital assets for 20,000 and its actual fair market value is 2 lakh. So what is the benefit I'm receiving? This is actually I've received virtual digital assets for inadequate consideration. Yes or no? And how much is the inadequate consideration, or how much is the difference of amount? That is 1,80,000 rupees is the benefit which I've received. The fair market value was 2 lakh and I've received and I've paid only 20,000. So the benefit which I received is only 1,80,000 and that will be taxable under section 56 subsection 2 clause 10 under IFOS, that is income from other source. So there are two scenarios. Number one, I'm receiving a virtual digital assets without consideration. If I'm receiving a virtual digital asset without consideration, then friends, tell me what is the treatment? And the fair market value if exceeds 50,000 rupees, then entire value shall be taxable in my hand. Scenario number two, if I'm receiving a virtual digital assets for inadequate consideration, that means I'm paying a consideration which is way less compared to the actual fair market value of that asset. If it is so, then what will happen? Then they say the difference of amount which I paid and the fair market value received by me shall be taxable in my hands under 56 subsection 2 clause 10. I hope this point is also clear for you. Now, let's understand the impact of TDS on this virtual digital assets. So friends, listen, TDS on payment on transfer of virtual digital assets, which is mentioned under section 194S of Income Tax Act 1961. This is with effect from 1st July 2022 onwards. So this TDS provision is inserted in income tax from 1st July 2022. What about VDA? VDA concept is there from 1st April 2022. This TDS provision has been inserted from 1st July 2022 onwards. So let's understand what exactly is the impact of TDS. So in TDS, there will be deductor, there will be rate, and there will be time. Now friends, who is that deductor? So they say any person who is responsible for paying to any resident any sum by way of consideration for transfer of a virtual digital assets. So what do you mean by this? Say friends, listen. Say for example, Mr. JK, I'm buying virtual digital assets. I'm buying virtual digital assets from Mr. A. So Mr. A is the seller and I am the buyer. And the value of virtual digital assets which I'm buying is rupees 2 lakh. Then I will be the deductor. I am supposed to deduct TDS on this virtual digital assets provided this Mr. A should be a resident in India. Resident in India. That's what income tax department says. So come back to the point, friends. So what they're saying, who is a deductor here? So they say any person who is responsible for paying to any resident. That means the payee should be a resident. Any sum by way of consideration for transfer of virtual digital assets. That means the buyer is the deductor under 194S. Now, what is the rate? So under 194S, the rate shall be 1% on the consideration. So friends, listen, on this 2 lakh is the amount which I'm paying. So I'm getting virtual digital assets and I'm paying to Mr. A rupees 2 lakh. Being buyer, I have to pay the amount, right? From this 2 lakh, I'm supposed to deduct 1% as what? TDS on virtual digital assets. And how much is 1% on 2 lakh? As you all know, it is 2,000 rupees. So I'm supposed to deduct 2,000 rupees and I'm supposed to pay him only 1,98,000 rupees to Mr. A while purchasing virtual digital assets. So the buyer is responsible to deduct TDS under 194S at what rate? At 1% rate of tax. I hope it is clear. Now, at what time you are required to deduct TDS? So let's understand. They say TDS is required to be made at the time of credit of consideration to the account of resident or at the time of payment of such sum, whichever is earlier. So it simply means if at the time of credit or payment, whichever is earlier. What do you mean by credit or payment, whichever is earlier? Say the moment when the buyer puts a credit entry on his books of accounts or when the moment he makes the payment, whichever events happen first, that time is the time of deduction. At that time, you are required to deduct 1% on the actual consideration as what? TDS. Now, there are certain few remarks in relation to this particular TDS point. So please listen. In case where consideration for transfer of virtual digital asset is wholly in kind or in exchange of another virtual digital asset, where there is no part in cash, or what they are saying, the part in cash that is partly in cash or partly in kind, but part in cash is not sufficient to meet the liability of deduction of tax in respect of whole of such transfer, then the person responsible for paying such consideration has to, before releasing the consideration, ensure that the tax is required to be deducted or has been paid in respect of such consideration for a transfer of virtual digital assets. So what do you mean by this, friends? It's a simple point. Listen, say for example, say I am the buyer and I'm buying virtual digital assets from Mr. A. So Mr. A is the seller. He is giving me a virtual digital assets of value 2 lakh. Alright, and instead of I am giving him my gold ring, I am giving him my gold ring of worth 2 lakh. Now the question is, how can I deduct TDS from this gold ring? Do I have to take an axe and cut a portion of the gold ring as TDS? Not possible. So what to do? In such scenario, being buyer of virtual digital assets, I have to make sure that I have collected 1% on this 2 lakh. That means the fair market value of the consideration. 1% of this 2 lakh as TDS. And supposed to collect 1% of 2 lakh as TDS from Mr. A. So I have to mandatorily collect this 1% on this 2 lakh from Mr. A. Then only I am supposed to release the consideration. So I should collect rupees 2,000 from Mr. A. Then only I am supposed to release the consideration. That means the gold ring. So what income tax department say? If the amount or the consideration which you are giving is either partly in cash or fully in kind, then what to do? Then if your cash consideration is not sufficient to deduct as a TDS, then you need to make sure that you have collected the adequate amount from your seller. only after collecting adequate amount from your seller, you are supposed to release that particular consideration to the seller. So that's what they say. Now, moving on. No tax is required to be deducted under 194S in the following circumstances. So, in the following circumstances, TDS is not required to be deducted. So, let's understand. So, listen. Consideration, if it is payable by an aggregate value of such consideration during the financial year does not exceed. So, listen. If the consideration is payable by, that means if the buyer is either an individual or a Hindu undivided family. The buyer being either an individual or Hindu undivided family, plus his total sales or gross receipts or turnover from his business or profession does not exceed 1 crore in case of business or 50 lakhs in case of profession during financial year immediately preceding the financial year in which the virtual digital assets is transferred. That simply means, say, this year I am transferring virtual digital assets. I am buying virtual digital assets. I am the buyer. I am buying virtual digital assets today. Alright. And if I am an individual or an HUF, then what you need to check is whether my business turnover in the preceding financial year. Say, for example, I'll give you an example. Say on 8th March 2023, I am buying virtual digital assets. Alright, I am the buyer and I am being an individual. Then the one thing that I need to check is whether my business turnover in the preceding financial year, that means 21-22 financial year. So the relevant financial year in which I am buying the asset is 22-23. I need to check the total business turnover in the preceding financial year, that will be 21-22. If that exceeds 1 crore, then if that does not exceeds 1 crore, that means it is less than or equal to 1 crore, or my professional gross receipts is less than or equal to 50 lakhs in preceding financial year, that will be 21-22. So in this case, and the consideration which I am paying is less than or equal to 50,000. So I am buying virtual digital assets valuing 50,000 or less. Then no TDS required to be deducted. So the point is very simple. Listen. If the buyer is an individual or Hindu undivided family having business turnover in the preceding financial year which is less than or equal to 1 crore, or professional gross receipts in the preceding financial year is less than or equal to 50 lakhs, plus the consideration while buying that particular virtual digital assets is less than or equal to 50,000, then the relaxation, they say no TDS required to be deducted. I need not deduct any TDS. That's what the income tax department says. Now friends, if I does not have any income under PGBP, that simply means if my turnover in the preceding financial year is 0 or gross receipts in the preceding financial year is 0, that simply means I am an individual or HUF, I does not have any business. In that case also, if my consideration does not exceed 50,000, that means if it is less than or equal to 50,000, then again TDS is not required to be deducted. So we can say two scenarios. Number one, I am being an individual or HUF and I am being the buyer. There can be a scenario where I have no business or profession, or I have business or profession but preceding financial years business total turnover less than or equal to 1 crore, or professional gross receipts in the preceding financial year less than or equal to 50 lakh. In both the scenarios, my consideration is less than or equal to 50,000. The consideration which I am paying at the time of purchasing virtual digital assets, if it is less than or equal to 50,000, then no TDS. Done. Now, friends, what is the next case? In other cases, apart from above, the threshold is 10,000. What do you mean by other cases? Say other cases, I'll say, listen, there can be 2-3 possibilities for the other cases. Number one, say I'm an individual or HUF having business turnover in the preceding financial year which exceeds 1 crore, or professional gross receipts in the preceding financial year which exceeds 50 lakhs. I'm an individual or HUF having total business turnover or professional gross receipts which exceeds 50 lakh or 1 crore, depends upon business or profession. Or I am any other person. Any other person. Say for example, a company or a LLP or partnership firm, HUF, sorry, not HUF, AOP, BOI, etc. So buyer under these two categories plus the consideration at the time of purchasing virtual digital assets less than or equal to 10,000. Then also no TDS. So this is what they say. So listen friends. So there are two thresholds. Threshold number one is less than or equal to 50,000. The consideration paid if it is less than or equal to 50,000, and that is applicable for individuals or HUF, either does not have any business or profession, or having business or profession which in the preceding financial year business total turnover less than or equal to 1 crore or professional gross receipts less than or equal to 50 lakhs. Then the threshold limit is 50,000. You are not paying a consideration over and above 50, then no TDS. In other case, that means you are an individual or HUF having a business income, but in the preceding financial year the turnover threshold exceeds 1 crore, or in the preceding financial year gross receipts exceeds 50 lakhs, or you are any other person like a company being a buyer, etc., then the threshold is 10,000. If the amount exceeds this amount, then definitely TDS is required to be deducted. Otherwise, no. So this is a threshold. Once the consideration exceeds either 50,000 or 10,000 as the case may be, you need to mandatorily deduct TDS on the entire amount. Once amount crosses threshold, you need to deduct TDS on the entire amount. I hope it is clear for you. Okay friends, now let's solve a question in relation to this. Alright, so this question is a part of your May 2023 RTP. This is a paragraph based MCQ. So be very careful. This is actually a very important question. So we will solve it together. Listen. So I'll read the question. Mr. Hari, aged 42 years, is a resident Indian who is salaried employee, and his salary income which is computed. What do you mean by computed? Computed means all the standard deductions and other deductions, exemptions, everything have been computed. Income from the head salary is given, that is 17,50,000. His brother, Mr. Rajesh, another person, aged 45 years, is also a resident Indian carrying on retail business in which he incurred a loss. So he has a business loss of 5,25,000, which is also computed. Alright. So the first person have a salary income, second person have a business loss. Now, for previous year 22-23, he also trades in virtual digital assets. So Rajesh also trades in virtual digital assets. Now, moving on. What they are saying is, the details of assets transferred by Mr. Hari and Rajesh during previous year 22-23 is given here as under. So details of assets and purchase and liabilities of different assets have been given as under. So Hari have purchased land and building. Date of acquisition is given. Cost of acquisition is given. Date of transfer expenses or transfer. Sale consideration is given. Both of them has transaction in virtual digital assets. The information in relation to that is also given here. Now, and there we have transferred virtual digital assets, and the buyer's information is also given in the question. The turnover of transferee, that means Mr. Ganesh and Mr. Wallish, is given. That means the turnover of buyers is also given in the question. The turnover of the transferee, that means for the financial year 22-23 is also given. Now during 22-23, Mr. Hari has a dividend income of 10 lakh. Hari, apart from salary income and virtual digital assets transfer income, he has some dividend income also from Indian companies, and he has paid an interest of around 4 lakh on loan borrowed from investment in shares. So both Mr. Hari and Mr. Rajesh have deposited 1,50,000 in public provident fund. Now, Mr. Hari has an interest on savings bank of 22,000, while Mr. Rajesh have an income from fixed deposit of 50,000. So cost inflation index is also given in the question. Now, On the basis of facts given above, choose the most appropriate answer to question number 1 to 6 below based on the provisions of Income Tax Act. So this is a paragraph based MCQ. On this paragraph, you are supposed to answer the remaining questions. So let's solve it together. Let's understand the first question. What is the tax treatment of loss from transfer of virtual digital assets by Mr. Hari? So let's understand what exactly is the impact on loss on transfer of virtual digital assets of Mr. Hari. So let's go back to the paragraph. So this question is in relation to Mr. Hari. Now, so number of virtual digital assets, that means units, 40 units he have. Date of acquisition is 2020. Now, cost of acquisition of this 40 units is 5,20,000. Date of transfer is 2022. Expenses on transfer is given. Sale consideration is given, that is 4,90,000. So let's take the sales consideration first. So sales consideration. How much is the sales consideration? 4,90,000 is the sales consideration. Listen, it's not yet over. Now, how much is the cost of acquisition, friends? So before claiming cost of acquisition, the one thing you have to be very careful. Can you claim this expense on transfer as a deduction? The answer is no. You cannot claim expense on transfer as a deduction because the only one and only expense that you can claim on transfer of a virtual digital asset is its cost of acquisition. Apart from that, nothing else can be claimed as a deduction. Hope you remember that. Now, cost of acquisition is 5,20,000. So if I claim this 5,20,000 as a cost of acquisition, then how much is the loss that I'm incurring? 4,90,000 minus 5,20,000, that will be 30,000 shall be the loss. 30,000 shall be the loss. Now, so what they are saying, 30,000 is the loss. So what is the question? What is the tax treatment of loss from transfer of virtual digital assets? So let's understand. So the first option, they say it is a long-term loss which cannot be set off against capital gain on transfer of land and building. It has to be carried forward for set off against long-term capital gain of subsequent year. So point number 2, it is a short-term capital loss which can be set off against capital gains on transfer of land and building. Third one, such loss cannot be set off against any other source of income in the previous year 22-23, but can be carried forward for set off against income from transfer of virtual digital assets in the subsequent year. And final alternative, such loss can neither be set off against any other income of the previous year 22-23 nor be carried forward to the subsequent year for set off of income from the same source. The answer is D. Hope you remember. If you have incurred loss on transfer of virtual digital assets, that means this 30,000 rupees loss, you need to simply ignore it. You need to simply ignore it. So if you have incurred loss from transfer of virtual digital assets, you need to ignore that loss. You are not supposed to claim it as a deduction from any other income, nor you cannot carry forward it to the subsequent year as well. I hope it is clear for you. All right, friends. So moving on to the second question based on the paragraph. What is the income includable in the total income of Mr. Rajesh on account of transfer of virtual digital assets? So it is in relation to Mr. Rajesh. So let's go back to the paragraph. So Mr. Rajesh have 50 units. All right. He purchased it on 2020 and he sold it on 2023. And the cost of acquisition is 2,50,000. Expenses on transfer he cannot claim. You need to ignore it. Sale consideration is 3,50,000. Now FMB as on date of transfer, no relevance for the time being. All right. So what to do with that? So full value consideration is 3,50,000 for Rajesh. So full value consideration for Rajesh is 3,50,000. And how much is his cost of acquisition, friends? So the cost of acquisition for Mr. Rajesh is 2,50,000. So 2,50,000 is his cost of acquisition. So 2,50,000. He cannot claim any expenditure as a deduction. And hence the amount of gain which is includable in the total income would be 1 lakh. And it is subjected to a rate of tax at 30%. There is no relevance whether, you don't need to check whether this is a long-term capital gain or short-term capital gain. It does not have any relevance because whether it is long-term, whether it is short-term, doesn't make any difference. The taxation will be under at the rate 115 BBI and the rate shall be at 30%. percentage. I hope it is clear for you. So that is the speciality of section 115 BBH, that is whether it is long term, whether it is short term, doesn't matter. The rate of tax shall be always 30%. So moving on. So the answer shall be B, option B in question 2. So moving on friends, question number 3. So what is the amount of tax deductible by Mr. Ganesh and Mr. Wallish under 194S from consideration paid to Mr. Hari and Mr. Rajesh for a transfer of virtual digital assets? So both Mr. Ganesh and Wallish, they are what? They are individuals. All right. Now, Mr. Hari as well as Mr. Rajesh is residents also. So 194S, let's understand. Listen. So these assets from Mr. Hari, these assets are purchased by Mr. Ganesh, who is engaged in the business of trading in food grains. And for Ganesh, his preceding financial year, total turnover from his business in the preceding financial year, that means the relevant PY in the question is 22-23. Preceding financial year shall be 21-22, and his turnover is 90 lakh. That means it is less than or equal to 1 crore. If it is less than or equal to 1 crore, then what will happen? If it is less than or equal to 1 crore, then the threshold have to be 50,000. Here the consideration which Mr. Ganesh paid is around 4,90,000. It is way high than 50,000, and hence TDS is required to be deducted at 1% on this 4,90,000 by Mr. Ganesh. So we can write TDS under section 194S by Mr. Ganesh shall be 1% on 4,90,000. So how much is 1% on 4,90,000? That will be 4,900 rupees. So that is one. Now there is one more case. That means from Mr. Rajesh, these assets are purchased by Mr. Wallish, who is engaged in the business of trading VDA. So for Mr. Wallish, this is a business in purchasing and selling virtual digital assets. And listen, Rajesh also trades virtual digital assets, but that doesn't make any difference whether it is a stock in trade or not. He need to tax that particular income under 115 BBH, and the rate is 30%. All right. Now, so the question is in relation to 194S. All right. Now, so Mr. Wallish, his preceding financial year business turnover is only 15 lakhs. Preceding financial year business turnover is only 15 lakhs, and the threshold is 50,000. If the consideration paid by Mr. Wallish exceeds 50,000, then TDS is required to be deducted. Here, the consideration paid by Mr. Wallish is around 3,50,000, and hence definitely TDS is required to be deducted on that entire 3,50,000. So the answer shall be TDS under section 194S by Mr. Wallish. By Mr. Wallish at 1% on 3,50,000, and the amount shall be 3,500. That shall be the amount. Now let's find out the options we have. So option A, nil, they say no. 4,900 and nil, no. 5,100 and 4,100, 4,900 and 3,500 respectively. Tax is deductible at 1% of the sales consideration, since the same is in excess of prescribed threshold limit, and the answer is option D. So option number D is answer for question number 3. Moving on. Let's move on to question number 4. I hope you are able to follow. Now, what is the income includable in the total income of Mr. Ganesh? Total income of Mr. Ganesh and Mr. Wallish on receipt of virtual digital assets for inadequate consideration. So we will take the case of Mr. Ganesh. Mr. Ganesh, how much is the fair market value of VDA which he has acquired? The fair market value of virtual digital assets that he acquired, in the question it says it is 5,10,000. They say it is 5,10,000, and the actual consideration paid by Mr. Who is that? Ganesh is 4,90,000. That simply means Mr. Hari, he sold it for 4,90,000, and the fair market value is 5,10,000. That simply means Mr. Ganesh got that for 4,90,000, where its FMV was 5,10,000. So how much is the inadequate consideration, friends? So 5 lakh 10 minus 4 lakh 90. So 5 lakh 10 is FMV and actual consideration was 4 lakh 90. So the difference of consideration is only 30,000 and hence not taxable under section 56 subsection 2 clause 10. So for taxing an income under 56 subsection 2 clause 10, the difference of amount should be more than 50,000. All right. Now, what about in the case of Mr. Wallish? So let's understand the case of Mr. Wallish. So in the case of Mr. Wallish, friends, listen. How much is the fair market value? It is 4 lakh 10,000 and the actual consideration paid is 3 lakh 50,000. So fair market value shall be 4 lakh 10,000 and the consideration is 3 lakh 50,000. So how much is the difference of amount? Difference of amount is around 60,000 and hence it is fully taxable. Fully taxable under section 56 subsection 2 clause 10 in the hands of Mr. Wallish. So let's find out the answer. So they say nil in both, 20,000 and nil, wrong. Nil in both case, wrong. 20 and 60 respectively, wrong. Nil and 60,000 respectively, and that is the right answer. Option D is the right answer for question number 4. I hope it is clear. Now, moving on to the next question, that is question number 5. So what question number 5 says, what is the total income, round off, of Mr. Hari for assessment year 23-24? Assume he has not opted for 115 BAC. So he haven't taken the new slab rate which is mentioned under 115 BAC. Then what will be his total income? Alright, so let's compute the total income of Mr. Hari. So I will write a note here, computation of total income of Mr. Hari. Alright, so let's take all the relevant information in relation to Mr. Hari. So Hari have a income from salary, that is 17 lakh 50,000, which is computed. That means it is after all the deduction. So the first income he has is 17 lakh 50,000. 17 lakh 50,000, that is income from the head salary. Then what else he have? Then apart from that, what he have is he have land and building and he sold that particular land and building. Now listen, its date of acquisition is 2021 and it sold on 2023. For land and building, period of holding that you have to consider is 24 months. If the period of holding is more than 24 months, then that particular land and building shall be regarded as a long-term capital asset. If the period of holding is less than or equal to 24 months, then it shall be regarded as a short-term capital asset. So here from 2021, then 22, 23, it is less than 24 months and hence it is a short-term capital asset. Now, how much is the full value consideration? 30 lakhs. So full value consideration is 30 lakhs. How much is the cost of acquisition? There is an expenses on transfer. That definitely you can claim. It's a normal land and building. You can definitely claim the expenditure on transfer. That will be 29 lakhs. Now, how much is the cost of acquisition? That is 20 lakhs. So 20 lakhs is the cost of acquisition of Mr. Hari. So after claiming that, the short-term capital gain shall be 9 lakh. Short-term capital gain shall be 9 lakh in the hands of Mr. Hari. So I will write that to here. So salary we have written, short-term capital gain, that is 9 lakh. Now earlier we have computed that he has a loss. He has a loss from transfer of virtual digital assets, which was 30,000. That have to be ignored. So I'm not taking that particular loss to the main computation. Hope you remember. So this entire area we can skip. Why? Because this entire loss we don't have to consider while computing his total income. Moving on. He has any other income. So Mr. Hari has a dividend income of 10 lakh. Now he has a dividend income from IFOS. So Hari's dividend income is around 10 lakhs. Now listen friends, listen. So they also say one more thing under that. So from shares of an Indian company, he paid interest of what, 4 lakh on loan borrowed for investment in shares. So under section 57, if you have purchased the particular shares by taking a loan amount, then the interest paid on loan, then the interest that you have suffered on loan is allowed as a deduction. Allowed as deduction from dividend income on that particular shares. Simply means I purchased some shares by taking a loan. I'm getting some dividend from that particular shares. From that dividend income, I can claim interest on loan which I've taken earlier for purchasing this shares as a deduction under 57. But there is a ceiling limit. How much is the ceiling limit? Maximum deduction shall be 20% of dividend income. Maximum deduction shall be 20% of the dividend income. That means here the dividend income is 10 lakh and the actual interest is 4 lakh. Maximum 20% on dividend income means, simply means 10 lakh into 20% and that will be 2 lakh shall be the maximum deduction. So what we can write here is interest on loan, which is allowed as a deduction under section 57. Maximum deduction shall be 10 lakh into 20%. That is the maximum. If the actual interest is less than that, then the actual interest. Okay. Then 10 lakh into 20%, that shall be 2 lakh. So this can be claimed as a deduction. All right. Now, does he have any other income apart from these? Now, Mr. Hari and Mr. Rajesh have deposit in 1,50,000 in PPF. So it is an 80C deductible item. So they have a deduction chapter 6A under 80C public provident fund. They have invested 1,50,000. Now, is there anything else they have? Now, Mr. Hari and Mr. Rajesh have deposit. Mr. Hari has an interest on savings bank deposit. That is 22,000. Interest on savings bank deposit is allowable as a deduction. Under 80 TTA, up to 10,000, you can claim it as a deduction. So, interest on savings bank, I will write SB interest, which is 22,000. And there's a chapter 6A deduction under 80 TTA. Maximum deduction shall be 10,000 rupees. I think apart from these, he does not have any other income. Now, let's compute his total income. How much is his gross total income, friends? First, let's compute his gross total income. So that is 17,50,000 plus 9 lakhs plus 10 lakhs. 10 lakhs minus 2 lakhs plus 22,000. Gross total income shall be 34 lakh 72,000. From that, he can claim both 1,50,000 as well as 10,000 as a chapter 6A deduction. So the total income shall be 33 lakh 12,000 rupees. So the total income shall be 33 lakh 12,000 rupees. Is there an option? So 3312 is the total income and D is the option. I hope it is clear. So we have computed the total income of Mr. Rajesh. Okay, moving on to the next question, that is question 6. So what they are saying, what would be the tax payable round off by Mr. Rajesh for 23-24 and what is the amount of business loss, if any, to be carried forward to assessment year 24-25. Assume that he does not opt for section 115 BAC. So it is the case of Mr. Rajesh. So let's compute it together, friends. So let's compute the impact of Mr. Rajesh. Listen. So we will go back to the question and we will find out Mr. Rajesh's income. So the first income Mr. Rajesh have is a loss. So as per the question, there is a loss incurred by Mr. Rajesh from his business. All right. So we will write down that particular loss. We will write it as business loss. Business loss, and that is 5,25,000 rupees. That is a loss. Now, what will are the other incomes Mr. Rajesh have? Mr. Rajesh have income from transfer of virtual digital assets, which we have already computed. And how much that income? It was 1 lakh rupees. That is Mr. Rajesh's income on account of transfer of VDA. Hope you remember. All right. So we will note that down. VDA income or income from transfer of VDA. That is rupees 1 lakh. Then what are the other incomes Mr. Rajesh have? So Mr. Rajesh have he have invested 1,50,000 in public provident fund. Both Mr. Hari and Mr. Rajesh have deposited 1,50,000 in public provident fund. So that is another deduction for Mr. Rajesh. And how much is the deduction? 1,50,000 under 80C. Public provident fund 1,50,000. He can claim it as a deduction. Now, what about the next item? Now, Mr. Rajesh has an income from fixed deposit, and how much is the income? It is 50,000. You have an income from fixed deposit, and it is 50,000. Fixed deposit, you cannot claim any TTA deduction. For claiming TTB deduction, you need to be a senior citizen for claiming that. Mr. Rajesh's age is, what is his age? It is given in the question. So he is only 45 years old. So he cannot claim TTB deduction anyways. So interest on fixed deposits. And how much is the interest? Listen, the interest shall be, or the interest amount is 50,000. Now the first thing, you can set off, this is interest income, okay? You can set off business loss from this interest income. That is quite possible. After these two set off, 525 minus 50,000, how much is the remaining business loss? That is 4,75,000. That is your remaining business loss. Can you claim that loss as a deduction from this income? The answer is no, because from income from transfer of virtual digital assets, you are not supposed to claim any deduction on account of any loss. Hope you remember that. So you cannot claim this 4,75,000 as a deduction from this 1 lakh. So what the only option you have is to carry forward this to AY 24-25. That's it. To the next year. That's it. All right. Now the next question is, there is a chapter 6A deduction. Can you claim this chapter 6A deduction from virtual digital assets? The answer is no. And hence this chapter 6A deduction also is gone. You cannot claim it as a deduction, and hence this is the only income forms part of the total income of Mr. Rajesh. So total income shall be 1 lakh. And the taxability will be under section 115 BBH at 30%. So how much will be the basic tax liability? So the basic tax liability shall be 30,000 rupees. And there will be a cess at 4%. There will be health and education cess, that will be 4%. So 30,000 into 4%, and that will be 1,200. So the total tax liability shall be 31,200. This is the total tax liability. Now, is this the net tax liability? No, because from this total tax liability, already his buyer has claimed or deducted TDS. Hope you remember. So when you go back to the question, Mr. Wallish has deducted TDS. And how much is the deducted TDS? The full value consideration was 3,50,000. Under section 194S, the rate is 1%. And hence, Wallish would have deducted a TDS at 1% on this 3,50,000. So 1% on 3,50,000 shall be 3,50,000 into 1%, and that will be 3,500 rupees. So TDS under section 194S, that will be 3,500 rupees. So after this TDS, so 31,200 minus 3,500, how much is the net tax payable? The net tax payable shall be 27,700. So let's check the answer whether there is a 27,700. If yes, done. If no, we need to do it again. So 27,700 is the tax payable. Yes. And the business loss of 4,75,000 to be carried forward to the next year. So that is the answer. That is option number C. So this is the revision of taxation of virtual digital assets along with the RTP question. I hope it is super clear for you. So friends, please don't forget to share this video with your friends and colleagues. For the time being, take care and bye-bye.